Hi guys, it's Henry here from IFE. So we've seen a lot this week. Coming to you speaking on the 26th of Feb 2022. Now, firstly, before I go on, I want to speak from a humanitarian point of view and say that I wish the Ukrainian people managed to get out well and safe with this conflict, because obviously war is never a good situation. But inevitably today I want to go on to a bit of a selfish point of how it will impact investors and what to look out for when war strikes. So normally you have safe havens go up, so the likes of the currencies, Swiss franc, Japanese yen, gold, they normally go up, so they may be worth diversifying into if you've got a bit of your portfolio in cash, because of obviously interest rates going to go up, it's going to get eroded. Interest rates are going to go up because of the gas price. But again, if Russia kind of stops the gas exporting out, that it may well do if the SWIFT payments are stopped, and also with a lot of sanctions hitting it, gas prices are going to be hit around the world. Probably not so much in the UK and US, but Germany, Eastern Europe, they have significant ties with Russian gas. So also you may want to think about other gas suppliers, Qatar, the Middle East, big LNG, that might be something to consider long term on that. But to be honest with you, there's a lot of unknown. The markets have been shocked and it's enacted unrationally what they do to uncertainty. But inevitably, it was always going to be a volatile year. What we do know is things are going to keep working, companies are going to keep producing, and it's going to keep going. The world's going to keep going. So on that basis, to keep calm, not let it bother your strategies, keep an eye on it, rebalance into more safe haven assets if it does look a bit risky, but don't lose faith on your overall goals of your portfolio. If you look back at when a war's been announced before, and when wars have came from a US basis, they've always bounced back. So that puts it in light, but inevitably just keep calm, keep with your investment strategy, look to rebalance into more safer haven assets if you are concerned. Also, goes without saying, if you've got holdings, a lot of people have ETFs with things like BRIC, emerging markets that do include Russia. You may want to limit your exposure to that, or limit your rebalancing of your portfolio to those to that certain asset or asset allocation class. I know emerging markets have been very popular over the last few years with a bit of diversification from the US tech stocks, etc. So that may be worth limiting. And looking at also what we spoke about throughout the year, and that is looking at companies that are producing, they are defensive companies, so they're going to be there in all environments, and also they have the ability to pass on costs to the consumer, because again, with these sanctions, it may likely push inflation up even higher than already forecasted this year. That again, if the company's got a good moat, it's got a good free cash flow, it can pass on the cost to the consumer, they're going to do well in this environment, inflationary environment. So there's my thoughts on investing. Just want to reiterate that I hope my thoughts go out to the people of Ukraine. Hopefully they can get out safely, and I'll put a link to UNICEF below if anyone wants to donate to that charity. Thank you.